Superior Lake Resources has released a positive restart study for their namesake zinc project in Canada. After reviewing the study, we determined an initial valuation target of 12 cents per share. The key assumptions that we examine in further detail include the operating and capital costs, commodity prices, as well as discuss the impact exploration success will have on our valuation. Overall, this was an excellent achievement by Superior Lake, given it is less than 12 months since they took control of the project. The standout features of the study were the operating costs and the initial capital costs. First, the average all-in sustaining operating cost is forecasted at 51 cents per pound over the life of the operation. The major reason for this low cost was the exceptionally high-grade ore that will be mined throughout the project's life. At this cost, the project ranks in the lowest cost quartile for zinc producers globally, meaning that even if the zinc price deteriorated, the project would likely remain profitable. The other feature was the relatively low initial capital cost. Typically for a new underground mining project at this depth, we would expect this cost to be higher. But given the significant existing underground mine development, in addition to the other surrounding infrastructure that will be utilised, this cost is relatively low and also has the potential to fall further in the future. And whilst the operation closed 20 years ago, both the independent consultants who completed the mine study, as well as CEO David Woodall, a mining engineer of more than 30 years, are both highly confident the underground infrastructure will be in good condition, largely due to the majority of development being in the hanging wall, the most competent ground at the project. However, if conditions were not as expected, the additional cost to improve is expected to be relatively minor. We did, however, test a number of different costing assumptions to see the impact on our valuation. We note even on the triple downside scenario, which also accounts for a lower zinc price, our valuation remains higher than the current share price. Base metal prices have experienced increased levels of volatility over the past 6 months, predominantly due to the perceived risk associated with the US-China trade war. Despite this, the zinc price remains relatively strong in comparison to the historical average, while zinc stockpiles remain near record lows. And with limited new supply entering the market in the near term, we believe a stronger price is likely in the future. To test our valuation sensitivity to the zinc price, we completed a sensitivity analysis. We note for every 10 cent per pound movement in the zinc price, our valuation changes by just over 1 cent per share. Finally, despite little to no exploration being completed at Superior Lake in more than 20 years, we see good potential for the mine life to increase further. This potential was recently highlighted by the company when they set a brownfields exploration target of between 2.1 and 5.2 million tonnes. We completed a number of scenarios to see the effect an increase in the mine life would have on our valuation. We do, however, note this scenario only really considers extensions to the existing deposits. Given this is a typical VMS style system, repeat structures can occur. Identifying these potential targets will be a priority for the company in the new year. If a new deposit is discovered, it's likely the company would consider increasing the plant's throughput to increase production, rather than extending the project's duration. This increased production, therefore cash flow, would result in a significant valuation re-rating.